End of 2017 saw commercial real estate values near peak levels throughout many markets in the world. Those values have remained at those highs into 2018. Joining me right now in a Fox Business exclusive is the chairman, CEO, and founder of Alexandria Real Estate, Joel Marcus. Joel, it's great to see you.
Always a pleasure, Maria. Happy New Year.
Happy New Year to you. And we love having you on the program because I think your space and your company is a reflection of what's going on in the country right now. Whereas retail is really bifurcated, you know, people closing stores, the Macy's of the world closing stores. And yet, when you look at the number of healthcare institutions, they're going up, and you're seeing that in real estate, aren't you?
Well, we've been benefited greatly. Alexandria is in a very unique space, as you know. We provide scientific research campuses for many of the companies here at J.P. Morgan. We're off now 4 straight years of record earnings, and our stock was up total return last year of over 20%. We just had Investor Day in New York City about a month ago and gave a forecast similar to 2017 of a very substantial increase in revenues and bottom line earnings. And what we did, which is unusual, we actually painted a 5-year picture. So in addition to giving guidance for 2018, we said 2019, 20, 21, and 22, we could probably double the revenues of the company on what we own today.
Wow. One reason that the company's market value is above $16 billion in terms of the market cap. When you look at how to grow the business from here, what's the answer to get that market cap even higher?
Well, we have some irreplaceable land locations in the best markets: Cambridge here in San Francisco, Mission Bay, down in Palo Alto, Seattle, around South Lake Union. And these are the places where companies want to be for recruitment and retention of today's workforce.
Is this part of what you've identified as 7 urban innovation clusters?
Absolutely, yeah. For sure. And our formula that we started many years ago, and actually we perfected about a decade ago, which led us to develop Mission Bay, New York City, which you know very well, San Diego, Seattle, here in San Francisco, was a great location where the young, talented workforce of tomorrow wants to congregate. Great science and technology, management and deep talent, and then risk capital in abundance. And that's the secret for the locations.
So let's talk about what those locations are, because I know one of your big sort of ports is technology.
Yes.
Another big idea is healthcare,
yes.
And then agriculture.
Indeed.
Yeah, build that out for us. Tell us what you're seeing there.
So in the ag area, for example, we'll go back to human health. We're all dependent upon health from the body standpoint. Nutrition is very, very critical, and technology puts them together. So we've focused on agricultural biotechnology. It's really become the center of the universe in North Carolina, Research Triangle Park, and you're finding companies, all the big major companies and many of the new startups have congregated in a cluster there, and we've taken advantage of that and are really the leading provider of campuses for those kinds of companies.
That is so fantastic. We were just talking with the Agriculture Secretary, yes. Secretary Perdue, and we were talking ahead of the president's speech today. He's going to Nashville to talk about his economic vision for the farmers. What do you think is most important right now in terms of that category?
In the farming area, I think it is...
What do the farmers want to hear from the president? I mean, what are they worried about?
Well, I think they're worried about a lot of things. I think innovation is very important because, for example, if you take food from the farm and move it to distribution, about 40% loss. And then we have hunger in this country and certainly overseas. So are there ways technology can improve the yields, make it healthier, and also minimize the amount of crop loss you have going from the farmer, from the field to the table? And people today are much more, I would say, picky about having healthy food. So the farmers are very interested in trying to minimize agrochemicals, trying to create a more organic kind of offering for their customers.
Well, that's taking place across the country. The organic and vegan trends is just getting hotter and hotter. Technology and also healthcare. When you're building real estate and when you're identifying hotspots for real estate for healthcare, what are you looking for? It's not necessarily a hospital.
No, we're looking for great research. For example, we started here in Mission Bay, just where the Giants Stadium is, and now the Warriors are moving down to Mission Bay. Back in 2004, there was virtually nothing there but the prospect of the University of California, San Francisco having their research campus there. So we created a cluster and a campus around that. Today it went from a single building. Right now there's probably 7 million square feet of research and commercial activating together, and you could imagine the amount of intelligent people who are recruited down there, high-quality jobs.
Yeah.
Amazing.
And these are high-paying jobs, by the way.
Very much so.
And when you look at technology as well, it's one reason Kiplinger's highlighted Alexandria as a top real estate investment trust for investors. When you look at tech, what's going on within tech and the real estate there? Is it largely tech married to healthcare?
Well, technology has actually gone after the same locations that research and development in the healthcare area has. For example, we just signed a very large lease with Facebook in Menlo Park near their main campus, and they are continuing to aggregate large amounts of real estate for campus needs. They want to keep people together. Recruitment, retention, kind of all works together.
Yeah, it makes a lot of sense. Do you see any change in terms of real estate as a result of this tax plan, which was signed into law? In
our particular niche, since we're in a very unique niche, which has high barrier to entries in these irreplaceable markets, the pharma and biotech industry will repatriate, thanks to the congressional approval of the president's tax bill, over $150 billion of cash. So a lot of that will go to hiring more people, renting more space. They'll continue to do, like today, Celgene's M&A. You'll see more M&A and a real continued growth. As I've shared with, I think, your viewers before, there are about 10,000 diseases known to mankind today, and medical science has only addressed about 500. So 5% that we've really addressed medically, we're really in the early innings. So that's why we were comfortable in giving the street a 5-year outlook on our performance.
Well, obviously the performance has been there. So you've got a clientele and an investor community that is a believer. But in terms of your 5-year plan, does growth happen all organic, or do you expect consolidation there as well, or through acquisition?
No, we actually have 2 engines that drive our growth. One is internal, which is just the assets and income we have in place growing on annual steps. And the second is creating new campuses with real estate we own today where we could double the revenues in 5 years. Probably no other real estate investment trust has that story today, and I think that's what's driven investors to invest in the stock.
Joe, we're looking at the performance from the stock as well. Great to see you. Congratulations.
Thank you. A real honor and a real pleasure. And again, Happy New Year,
and
Maria.
And to you. Joe Marcus joining us there.